Now, in its latest forecast, eMarketer estimates that Facebook is going to lose 2 million users under the age of 25 this year. And while the research firm predicts that Facebook-owned Instagram will pick up some of those lost users, competitor Snapchat will be adding even more in that age range. To get us a check on the sector and the industry, Goldman Sachs internet analyst Heath Terry joins us as Goldman kicks off its annual tech conference in San Francisco this week. Heath, thanks for joining us.
Thanks for having me.
Let's just start with Snapchat. Of course, there's a lot of excitement about its latest trends. How much room do you think it has to grow here, and is it coming at Facebook's expense?
Well, I think there's a lot of room to grow in terms of the size of their user base, right? They're one of the smaller platforms out there, particularly among the public platforms. We think that the messaging functionality of the platform has incredibly wide applications, and we think the effort that content producers have in terms of using Snap to deliver content has a lot of room to go. So, given the size of the social media audience out there and where Snap's starting from, we think there's a lot of runway.
Yeah, is it going to remain niche? So the shares right now are under 19 bucks. Where do you see that valuation going?
So we've got about a $26 target on Snap. It's largely based on the value of the platform. You look at the scarcity here. It's not like there are a lot of scaled social media companies out there. You have Facebook, you have Twitter, you have Snap in the U.S. and in Western markets, and that's it. And that kind of scarcity value, I think, is why you see investments like the one that Tencent made into Snap happen. It's why advertisers are, in a lot of cases, scrambling to find inventory and look for places to put incremental spend, particularly as their share of spend in more traditional channels has to come down as viewership and readership comes down. So, a lot of it just comes from the value of that platform overall. Right. You certainly can't justify it on existing financials, but we think you will be able to over time.
Do you also think that Snap and Twitter, which again was up huge after its earnings, are going to benefit from, again, now today we have Unilever coming out and saying they're going to pull their ads from Facebook and Google if they continue to, quote, fail to protect children and increase transparency. Do these corporate advertisers just have to make happy talk to try to show like they're doing something on this, or is this a real threat for Facebook and Google?
Well, I mean, I think it's a point of leverage for them, right? You're talking about huge platforms in Facebook and Google that have really for the last few years had the leverage over advertisers. 93% of every incremental advertising dollar last year ended up on Facebook or Google. And so this is one way for advertisers to try and claim some of that leverage back. Not to say that they're not serious about protecting children or making sure that their advertisements aren't near hate speech, but this is largely about making sure that they get better economics.
Yeah, and finally, and this is a little bit, sort of separate, but I guess what happens affects the stocks you cover. The New York Times did have a pretty good report last week. The digital subs for the Wall Street Journal continue to increase. Can those traditional news platforms actually also make some inroads against the competitors they have been saying are eating their lunch?
Well, I think it's always about content, right? And so you look at the success that Snap and Facebook and YouTube have had. You look at the success that some of these more traditional advertising platforms, whether it's print media or digital media, have had. Ultimately, if you've got the content, the advertisers are going to find you, and ultimately the audience is going to find you. So, I think as long as they're investing in content the way they are and having success with it, that's going to continue.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.